Oh, thank God. Okay. Awesome. All right, then I'll get started. Let me make this full screen. All right. So if you can't see my mouse, I can't see anything in the chat because it's full screen. So I guess B, if you could text me if you can't see my mouse. But I'll go ahead and get started. So the whole purpose of this class, so I did a class before, and then I also taught in the master class, and in those classes I went through and I really went through like kind of the fundamentals of the trading strategies and the trading concepts that I used. So that one was kind of more like from an educational perspective. So at the time that I taught that class, there was, I think, only just the SMT indicator, and then like the version of the SMT indicator that had Fibonacci retracement levels that I use as support and resistance. So since then, I've developed like 19 more scripts. So now I have like 21 scripts that are all available. Most of them, like 10 or 11 of them, are just key levels, but the other 10 have their own different functionality and they have their different use cases. So I wanted to go through all the different updates because I've kind of been learning how to code and how to get some cool stuff into the scripts. I'll give you some background on myself. And then I'll go through, as you can see here, I want to go through each one of these scripts, and I want to give you guys a tutorial on how they're used, also like some background on how they were developed and why I developed them. And then once I go through all the scripts, I want to kind of like pull it all together, and then I want to show you how I use my setup on SPY, how I chart and how I take trades using like the knowledge and of price action and charting that I have. But then I also use these scripts to help me out a ton. So a lot of this stuff, I've just automated a lot of the things that I usually do. So like you'll see like supply and demand zones, support and resistances, like all these things that you would normally just have to go find yourself and draw. I've automated all that so I can just focus on seeing my setup, taking the trade, and then getting out. So that's made things a lot easier. It's reduced a lot of the emotion in my trading. So I'll go through all that, and then I'll show you some demonstrations, just integrating all of them together, and then I have like a Q&A portion. I have it as like 5 to 10 minutes, but it's not like a hard stop at 1 hour. So if we get a lot of questions and then we go over an hour, obviously feel free to drop off, but I don't mind staying on until we answer a good amount of questions. So I'll go get started with a brief introduction. So I just go by Z, but my handle is Stockman Trading, and I started trading in November 2019. So I am 24 years old. I'll get started on like a little bit of personal background because I don't think too many people actually know much about me like personally. So I went to school for mechanical engineering. That was my major, and then I had a minor in mathematics. And so I've always kind of looked at everything from like an analytical perspective and from like a data-driven perspective. So that kind of is a no-brainer why I developed all this stuff. I started working in the aerospace industry, so I was doing helicopter and jet engine design in like the defense industry and some civil aerospace as well. And now I'm currently a systems engineer, and now I work on, I'm still working in military defense contracting, but I work on like radars and stuff like that. So that's kind of like my professional life and a little bit of personal background outside of trading. But like I said, I started in November 2019. I did not know what I was doing at all. I would just go on like StockTwits and like try to pull up some charts that were trending, and then I would just buy them when they were green. And then when they would go down a little bit, I would panic and I would sell them. So I was just selling at losses over and over again. And I lost 99% of my portfolio my first year. And I was in college, right? When I first started trading, I think I was 19. So 19, I guess I was 20. But yeah, I didn't have that much money, right? I was still in undergrad and I was doing like internships. So I lost a good chunk of money. But then when COVID came around, I started to look at, I kind of took it a little bit more seriously. I wanted to learn more about the actual technicals. I wanted to understand price action, volume, candlesticks, and maybe even like some charting. So I read a couple books, and then I really got into some of the COVID plays because those really boomed, and that's when I really saw like how much, like what's possible with trading, because we saw names run like, you know, upwards like 1,000, 2,000%, and that wasn't really crazy. That's just like anyone who was developing like a vaccine or like testing or like medical equipment, anything like that. But even though I made some money during the COVID names, I didn't actually find any consistency. My P&L was all over the place. So I wanted something more consistent and more sustainable. So I moved over to larger caps, and I just kind of messed around with swinging, and I tried a bunch of different strategies, but I could never find anything that really resonated with me. I figured I was like, it seemed like I was just trying to like find other people's strategies and mimic them and like combine them, but it didn't really work for me. So I decided to kind of do my own thing. So I started focusing just on SPY. So I would just like every single day, like all day, I would just be watching SPY, just learning the ins and outs of the price action. I started scalping contracts. I found out about zero DTEs, which I guess they're controversial, but because I'm a scalper, I trade them perfectly fine, only in for a few minutes, and I cut my losses when they present themselves. But so I found a lot of consistency, and then like over the last 3 months or so, when I've really been nailing down my strategy, developing my scripts, all that stuff, I've done so far. I guess today it's like 1,600%, but you can see there on the right hand side through TraderSync, I'm up about 1,560% in the last 3 months, and then at the top there, that was just up until April, it was like 1,200%. So going strong. You can see my P&L curve actually looks kind of smooth. It's like there's like a couple bumps in there, but it's a lot more consistent and cleaner than what I used to do. It was just kind of all over the place before. So I guess I just want to discuss the strategy that I use. So I kind of distinguish between A and A plus setups. Those are really what I look at. And then when I define like an A or A plus setup, what I'm looking for is before I enter a trade, I don't want to just see like one thing. I don't want to just see like a big green candle and I hop in. I also don't want to just see like just volume increase and I hop in, or EMA crossovers, any of that. For me, because I've always looked at everything from like, I guess kind of like, I don't know, like from a statistics and mathematics perspective. Like I just want to enter where I have the highest probability of profiting. So why would I ever put myself in a situation where I'm unsure, or I only have a couple of things going my way? So what I do is I look for at least 4, ideally 5 if I can, pieces of conviction, and I size into those plays based on that. So if I find an A setup which is like 4 pieces of conviction, and you can see they're all like listed down there. So what I consider like a piece of conviction is like an EMA cross in the direction I'm looking at, so like a momentum shift. I look at the MACD, I'm looking for breakouts of supply and demand zones. I look at patterns, I look at volume, but I'm only concerned with volume on breakouts or significant candles, so that's like engulfing candles. I do like to use VWAP, and I look for, breaks and closes below or above VWAP, key levels, all that stuff. So if I can just identify 4 or 5 pieces in the direction that I'm looking at, then I like to size according to that. So honestly, with like my highest conviction setups, at this point with a larger account, I don't size anything larger than 10%. I guess if you have a smaller account, like when my account was under like 1,000 or 2,000, I would size a little bit heavier. I would go maybe like 20% max, especially if you're like at a $500 account or less and you're trading contracts. Those contracts can be, from 50 to like 100 something dollars. So just even buying like 1 or 2 contracts would put you like 20% of your account. But I do try to not size too heavy, especially with 0 DTEs, because the theta kills you, and even if we are moving in the same direction but we're doing it slowly, you can still lose. So like I said earlier, the reason that I only take these setups is because I'm just looking at it from like a probability standpoint. I want to win as many times as possible, lose as few times as possible, and at the same time, if I win 4 out of 5 times or 3 out of 5 times, and then I just manage my losses so that they are even the same as my wins, I'll still be profitable. But I even like to, how it is right now is I will win roughly 4 out of 5 times. My losses are, we can say like a win is like 15 to 30% and a loss is like 40%, because my loss is a little bit wider. But because my win rate is so much higher than my losses, as you can see in those P&L curves, it's kind of like just a steady increase with a couple of pullbacks. So at the end of the day, I developed this strategy because I'm actually a pretty emotional trader. It wouldn't seem like it, but I am, like, even though I'm very data driven, it's because I'm an emotional trader. So I always found myself like panicking or like panic selling, or I didn't like swings because I would be like, I'd have a swing position, I'd be like up at night and be like, man, what if this thing tanks, like, am I gonna lose all my money? So I didn't want to deal with all that. So I developed a scalping strategy that's high confidence. So I just get in for a few minutes, get out. Now I'm completely in cash. I don't have to worry about, oh, what if, overnight some crazy thing happens, like, there's like some war news or like a bank collapse or anything like that. That doesn't affect me, which is awesome. And then also the reason that I like these A and A plus setups is because when we do all of our due diligence before entering a trade, so when we can identify all these pieces of conviction and we have all this data in our head, like, okay, I'm super confident in this, all these things are in my direction, when it doesn't work out, it's not really a big deal. You did everything you could, you cut your loss, because 4 out of 5 times, or whatever it is, even if you lose this time, you're going to win in the long run, and you know that most of the time it's going to work out. So you're confident in your system, and you take those losses because they're not the end of the world. So There's just a little bit of my background on my strategy. So the main purpose of this was kind of just to go through all the different scripts, how they're used, how they're developed, and I guess if you're really curious about like coding and algorithms and TradingView, I guess the power of like PineScript and what you can do in these platforms like TradingView, this will be pretty cool to see. So I'm going to start with the SMT indicator. So this was the first ever script that I developed. So what I was looking for is, in the, like a couple slides ago, I was talking about how I was always looking for like 4 or 5 pieces of conviction. So I didn't want to just sit there and like wait, because in the moment, especially if you're scalping 0DTE contracts, when you get a position and you're sitting there trying to like find 5 pieces of conviction like that, if you're not looking in advance, that can be kind of stressful, and you lose time and opportunity cost trying to do that. So I said, what if I could develop something that when it finds at least 3 pieces of conviction, can I code all 3 of those pieces of conviction so that when they all happen simultaneously, I can be alerted, and then I can just know right away, boom, if I see that, I already have 3 pieces of conviction, so all I need to do is find 2 more. That would be super helpful. So I decided to code this, so whenever I get 3 pieces of my conviction, so they're related to like EMA crossovers, volume, MACD, things like that, whenever I get 3 of them, an alert will go off. It will send a notification to my phone, so a mobile push notification. It's going to send, it's going to make a noise on my desktop, a loud beeping noise. It's going to do a pop-up, all that stuff. And I'm even going to integrate it into Discord channels so that you can like get pinged for signals, stuff like that. So that was super helpful. So it would just let me know when there was a potential setup, and then I could just find another piece of conviction and hop in. So the way that it works is it automatically plots several of the key levels. So I know a lot of people use key levels like pre-market high, pre-market low, high and low of days of previous days, things like that. So it automatically plots all those, so you don't have to go and find the, it doesn't take too much time, but that's another thing that we can automate. And if we have the power to automate it, why wouldn't we? So there's that. It also will plot the 5, 9, 21, and 200 EMAs. And you can enable and disable those. You can change the color, whatever you want to do. And it also plots VWAP. So another cool thing about creating indicators like this is TradingView. They have like a limited number of indicators you can put on your chart if you don't have like a premium subscription. And by combining all this stuff that otherwise would be separate indicators into one, that allows you to just have everything centralized. So we have all our EMAs, we have VWAP on there. I've allowed it so that you can choose the market hours. So if you only want to receive data or signals from like 9:30 a.m. to 4 p.m. Eastern, which is for me, that's market hours, you can do that. I've also now built in, it's called like a chop filter, and it uses the TTM squeeze, which is, it just kind of takes Bollinger Bands and Keltner channels, and it uses that to determine when the market is trending. So when we have a lot of chop, you can turn this on, and it will remove all the signals that occur within a specified parameter. And like I said, there's alerts for all those time frames. And the cool thing about the newest development with this is, so normally if you have like a 2-minute or 5-minute chart open, your data is calculated based on that time frame. Your EMAs are on that time frame, everything is based on that time frame, and signals would be on that time frame. And so what I did was I integrated all those time frames and kind of had it so whatever time frame you're on, you can see the signals for all the other time frames. So if I'm on the 2-minute time frame, I can see data for the 3-minute, the 5-minute, the 10-minute, all the way up to the 65-minute, which is insane because now if I'm on the 2-minute chart, and you can see like at the right hand side there, I'm getting 3-minute sell and 10-minute sell. What that's telling me is we're getting an A setup on the 3-minute chart on the sell side and an A setup on the 10-minute chart on the sell side, which then gives me conviction that we're not just trending downward on the 2-minute, but we're also trending downward on the higher time frames. And you can see that's good conviction. As soon as we close below VWAP there, that's a really good entry for me. I would hop in there and then just ride that to the next level. So right there you can see on the right hand side, yesterday's low. You can just enter there, use the 9 EMA or the 21 EMA here as your stop loss, and then you can just ride that down to the next level. So what else? Yeah, there's now a dashboard at the top right, so you can see it shows all the different time frames. It shows the most recent signal, and it's even color coded. So what this allows you to see is kind of just from a glance. You can see the 3, the 5, and the 10, which are all here, are on the sell side. So those are all. So on those time frames, we're looking at sell signals, and then you can see the other time frames. And then sometimes what helps me is if I look at this and all of these short-term signals are red or green, then that gives me a good idea of the short-term momentum. So, and then it also has, you can see here, it's very small, but there's like a support and resistance line. So that support and resistance automatically tracks price, and then it draws those for you. So I factored all of that into one indicator, which I use every single day. And then I have a version of it that just factors in Fibonacci retracement levels. So those are just levels that I grab from the daily chart They're based on the Fibonacci retracements. So whenever we have like an impulse or a move in one direction and then a pullback in the other direction, that pullback is a certain ratio of the original move. And I've pulled in those retracement levels. I was able to get a few of them in there before I reached the maximum. And so I have these fib levels colored. So the golden ones are 50 and 61.8% retracement levels. So those are the strongest retracements, or like support and resistances as we use them here. And then I have the red ones as every other ratio. So the way I use these, this is just for SPY at the moment. I haven't drawn retracements on the other tickers because I really just trade SPY. But now we have all of these signals and we have the SMT indicator, but then we also have additional support and resistance that we can use. So example here on the right hand side, you can see we had multi time frame confluence. So we had a 2-minute buy, then a 3-minute buy. So then all of these higher time frames are now shifting to a bullish momentum. And then after all that, you can see we continue going up, up, up. And then this is the Fibonacci retracement resistance pulled from the daily time frame. So you can see we failed to break out above here. We had multiple rejections, and then we got a 2-minute sell. So you can see we have an EMA crossover. You can see we have a bearish engulfing candle, raised volume. The MACD is not there, but the MACD would be red, so that gives us all momentum signs to the downside. And then you can see we make a push down, and then we get some buy signals, and we go that direction. So it just really, it has the same exact functionality as the other indicator, but now you have additional support and resistance for SPY. So the 13 and 48 EMA SMT indicator. So I had a lot of people who use like Casey's 2-minute strategy, which is a legendary strategy. So a lot of people who trade the 2-minute chart actually use the 13 and 48 EMAs when they trade. And the reason why is because the 13 and 48, because we're on a shorter time frame, if we want to get EMAs to behave the same way as a higher time frame, we need to have like a longer period. So the 13 and 48 EMA behave like the 9 and the 21 EMA behave on the 5-minute. So they capture more of the trend and for longer duration. So this is really good when you have like trending days. So you can see on the right hand side here, we got buy signals related to the 13 and 48 EMA. And then we just continue to ride this 13 EMA all the way until we pulled back here to the 48 EMA, and that 48 EMA held, and then we kind of just continued riding those two EMAs. So this essentially captured a huge part of the trend. And so if you prefer to trade the 13 and 48 EMA, I've actually coded this indicator so that one of the criteria is a 13 and 48 EMA crossover. So that's going to give you less crossovers, but those crossovers and the rest of the conviction is going to be it's going to be higher confidence. You have those longer EMAs, so you can expect more follow through on those moves. So that was a cool addition. So whoever wants to use the 13 and 48 EMAs, I got you. So I made this indicator as well. Then another tool is the swing indicator. I don't swing trade, but a lot of people were telling me. So the thing is with this, like, with like the, I guess like the toolkit that I've built, the reason it's so many scripts is because I want to create something where, I guess you can really think of it as like a toolkit, right? Like you can have a hammer, you can have a wrench or whatever, but if you have all of those options that you can do anything with, and you can just choose which ones you want for whatever application, that's the best thing, right? So there's people who swing trade, there's people who scalp, there's people who do all these different things. So I decided to create kind of something where you can find an indicator or script to help you out no matter what you do. So I created an SMT Swing Indicator. So it has all the same functionality as the other ones. You have your alerts, you have your dashboard, you have your signals, you have EMAs, all that stuff. But this one is tailored specifically to higher time frames, so it allows you to swing trade effectively. So the other ones, they were like 2-minute, 3-minute, 5-minute, all the way up to 65-minute. The swing indicator is focused on the higher time frames. So the 30-minute, the 65-minute, the 1 day, and the 1 week. So what I typically would use this in is I found it's really great on the 65-minute chart. And you just kind of identify high confidence entries and exits. Well, mainly for entries, but you can see here, this is SPY from, so this was in March. This was a good example to pull. So you can see once we get confluence, you get a buy signal, and you get a lot more follow through as opposed to the other indicator where it's really just for scalping. So these moves, these are 65-minute candles. So this is like, you know, this is like 2.5 days. So that's more along the lines of swinging. So if you are interested in swing trading and that's something that you prefer as opposed to scalping, you can mess around with this, alter the settings. It is based on SMAs instead of EMAs. I think this one is the 13 and 48 SMA, so that's what we're looking at. And then we're just looking at higher time frames. So that's that one. And then I also created an indicator or script for unusual volume. So this one is actually what helped me. So this one was on AMD today. We had a pretty insane breakout. And so using a script like this can actually allow you to identify those breakouts when they happen or when huge volume comes in. And I've actually used this script multiple times to play Boeing for several 100% moves. So basically what the script does is you look at from candle to candle, there's obviously a volume change. So whenever we have volume coming in that's higher than the previous candle, then we're able to identify whatever that volume is, and then it can give you an alert. So if you want to know when the next volume on the candle is twice the previous candle, 3 times the previous candle, even up to 5 times the previous candle, you can set that up in the chart, and then you will get an alert whenever that happens if you configure it that way. And then you would also get like an arrow, which you can see over here. So this was for AMD, so I entered some contracts in AMD, and usually when I enter something, if I'm holding a position for longer, I like to know when we could potentially have some really big moves, so I can go back to the chart and check it out. So I usually have like a 2x alert and then like a 5x alert. So whenever we get 5x volume increase in another candle, you know something's happening. It's usually news. You usually don't get a 5x increase in volume out of nowhere. So whenever that happens, you get an alert. And so here you can see from this candle to the next candle was over a 5x increase. So I mean the volume here was insane. So you get that arrow, you get an alert sent to your phone or to your desktop, and then you know, hey, there's an insane amount of volume. So now you're thinking, okay, let me go check out the chart and see what's happening. So with AMD, we got this massive increase in volume, got some news, and we broke out above this resistance here, closed above there, and then we just had 4 consecutive engulfing candles and made a 10% move from that breakout point. So that was pretty crazy. The contracts went up over 2,000–3,000%. And so it's really good if you like to play news. If you just set 5x alerts on some tickers, and then whenever you have a crazy amount of volume, it's going to let you know. You can also configure the excuse me. You can also configure the trading hours. So if you don't want alerts on volume that's like after hours because it's really inconsistent, you can just set it to market hours, and then whenever you get some unusual volume during the market hours, you will get an alert. Now these are like getting into the newer scripts that I've developed that are a little bit more complex. So this next one is automated support and resistance. So basically what it does is the algorithm, it goes and it identifies support and resistance and pivot points. So whenever we have a big reversal or we have a level that's tested multiple times from multiple candles and holds, the algo can identify those pivot points and those strong points, and it can draw lines of support and resistance. And the cool thing is these support and resistance lines, they will change throughout the day as price moves. So if we were to break out from this current structure that you see on the right hand side, if we were to make like a move to the upside here, it would find support and resistance levels that correlate to that price action, and it would adjust these levels so that you always have support and resistance that follows the current price action. So you can see here we're bounded by this range, and all these support and resistance levels are within this range. We formed this support right here, and then we formed a support right here, and then you can see same with the resistance up here. That resistance was tested later in the day, failed to break out, and then made a push back to the downside where it found support right on the same support that was generated automatically here, and then we had a bounce, and then you can see it held that support multiple times later. So I use this all the time. I've had people who just literally use this script, and there's somebody who just passed an eval the other day just using this. So if you know how to trade levels, if you know price action, it can be super helpful. And it also identifies these levels, support and resistance levels, for the past several days. I think up to 10 days. Sometimes I think on the shorter time frames it's like 5 days. And it just leaves this like tag, like this label here. So if you grab that label, if you just draw a line right under it, then that'll mark the resistance and support level. So if you want to do something like that, you can just mark previous day resistances and supports, which I do, and it's super helpful. And then just like before, I've integrated trading hours into all these scripts, so you can turn off these levels for pre-market if you want, and then you can change the colors, and you can even change the width of the line and then the look back periods. That's how far it looks back to pull data. So, and then here's an example of what I was talking about. So you can see that it leaves. So this is the current. This was FOMC day, right? So this was it's a controversial day there. So we did have a lot of chop. It was kind of garbage price action, but at the end we did get a sell-off. So you can see that we got some levels from the prior day. So if you look at the prior day, you see these gray labels. they're marked as support and resistance. All I did was I went through in the line tool and I just drew a line under each of these gray texts, and then that drew my white lines as support and resistance, and then these green ones and the red ones are automatically there. So you don't even have to understand, you should, but you don't have to understand support and resistance. If you just drew lines there, that would bound the support and resistance for you. So if we look at FOMC day, what happened, we opened at this support, we moved up to this resistance right here, we rejected, and then we came back down to the same support, which was formed from this cup and handle the prior day. We broke through that, we hit this support here, and then we bounced up. And then you can see, so essentially the high of day here at FOMC, this resistance right here goes all the way back to the prior day. We already had this line. So if you're trading here and you see that price is hitting this area, this resistance, it simply could not break through that resistance or this resistance up here, and then we had a huge dump to the downside. And what's interesting is the support that was drawn the previous day, that low of day support that we had, ended up being the low of day the next day, and that's where we bounced into after hours there. So super helpful. That's just, automated support and resistance, which is handy. And then I use supply and demand zones, so I decided to automate those too, because why not? So the way that the supply and demand zone script works is it identifies supply and demand zones using the high and low of days for up to 10 days in the past. So the reason that we use the high and the low of day is because if you think about it, those are inherently the pivot points of the day, right? That's when sellers shift to buyers and buyers shift to sellers, because the high of day, inherently, we only go down from there, and then vice versa, the low of day, it's only buying pressure from there. So I use those low and high of days to draw zones, and those zones go up all the way to 10 days in the past. You can enable whichever ones you want. You can change their color, and I use these all the time. And again, this is something that some people just trade zone to zone and then use price action. So if we look at the right-hand side here, these green levels, they are... So anytime we have a low of day acting as demand, the script will pull that, it will color it green, and then it will label what day it comes from. So even though it says, and this is kind of just understanding the nature of zones and price action, if it says 5-day prior demand, it doesn't mean this is acting as a demand zone. Anytime you have a zone overhead, it acts as supply, and anytime you have a zone under you, it acts as demand. But it's just saying that's where it pulled it from. So if we look at price action, you can see we ended up dumping here. We ended up retesting this zone. We could not break through that zone. We had to retest maybe like 5 or 6 times. Then we dumped to the next zone. You can see we found support perfectly on this zone. And then we moved up to the upside. I think this was literally today, right? Yeah, this is, I think this is from today. So you can see that we made a move to the upside. We couldn't break out of this zone. Again, push back down to the downside. And we find support on this zone again. And then we make a move to the upside and we form this double bottom. And we break out of this zone, but you can see here if I drew a line, we could not break the opening range, and so we ended up pushing back down, consolidating, whatever, you get it. So again, we rejected on inverted hammer candles twice this zone. So just understanding how the zone works, I've explained supply and demand zones before, but it's probably one of the most common things that traders use these days, supply and demand zones. So I highly recommend, even if you don't want to use the scripts, you should definitely understand, the concepts behind supply and demand zones and why they act the way they do. And it helped my trading a lot, and I'm sure it can help yours. So, and if you don't like those labels, you can hide those as well. So that is the auto supply and demand zones indicator. So they just draw them automatically every day. You don't have to go and look for them yourself. So now I'm going to kind of like tie in. Oh man, I guess this is what I did in the previous slide. But I guess it's annotated here. So like I was saying, rejected, and then we bounced twice. We formed this bullish pennant. We broke out, and then you can see this support right here. After we rejected the zone is where we ended up finding support multiple times. And then, yeah, so those are how the zones acted. So going to the legacy SMT indicator. So this was, it's got some nostalgia here. This was the first indicator I developed. So this is the SMT indicator in its simplest form. If you don't care about the dashboard, if you don't care about all those key levels, you don't care about having multiple time frames, none of that matters to you. All you want is a time frame you're looking at, and you want to know when we have A+ momentum shifts or A momentum shifts, and you want notifications for that. This is the simplest version. What it does is it just uses the 3 criteria. Whenever we have those criteria, you get a red or green arrow, and you can set up alerts, and that's it. That's all it is. You can see this was FOMC day. We had a little push to the upside there, and we had the sell signal, formed a bear flag under the EMAs, made a push to the downside, and then we caught this 5-minute sell signal right here, and you can see this closed below. This was the lowest close out of all these candles. We had some support right here and we closed below, and then we just ended up dumping the rest of the day, and we could have used the 9 EMA or the 5 EMA here to kind of determine the trend and bound our price action in there. And so that's how those signals can help you. The main thing about these signals is, I guess, so I work from home as an engineer, and so a lot of times I'll be in meetings or I'll be working on a project or something. Obviously, I can't sit there and stare at the charts all day, nor do I want to. So whenever something happens like this, whenever we get a shift in momentum on some conviction, it just alerts me, and then I can take a look at the chart. So we got this alert. I took a look at the chart. We saw, okay, this is a big dump, and then we can hop in puts and then ride that out, and then that's how that works. So EMA Crossover Alert. So if you just want to know anytime an EMA crossover happens, you don't care if it's like a crossover with conviction or not, you just want to know every single time an EMA crosses over. I created this indicator to do that. So it plots any two EMAs that the user defines. So the other SMT indicators, they're only the 9 and the 21 and then the 13 and the 48. But if you use a different period, because I know some people use like the 8 and the 20 or the 8 and the 21 or like the 10 and the 50, or there's just different variations that people use. So I made an indicator that allows you to define the length of your EMAs, and then whatever EMA length you want, you can set. And so anytime that crossover happens, you will get an alert on your phone or your PC or whatever. Again, you can define the market hours for this. So if you only care about crossovers during the day, then you can get alerts for those. But this is just like the legacy indicator where you can only display one time frame at a time. And then like I said, so on the right hand side here, I changed the period just for demonstration. So I usually use the 9 and the 21 on the 5-minute chart. So here's a way higher, this is the 10 and the 50, so much longer periods. So you can kind of get more sustained moves. So you can see this crossover happen, and you can kind of like ride the 9 EMA there. And then we got the alert on the downside move a little bit later. So this, on the shorter EMAs, this candle was the candle that had the sell alert, so you would have gotten in earlier. And then on this, using the 10 and the 50 EMA, you would have gotten that alert a little bit later. So it just kind of depends on how you like to trade and what EMA lengths you like to use. Alright, so I think I have a few more scripts, but this is the SMT Additional SPY Fibs script. So I talked about Fibonacci retracement levels earlier. TradingView has some limitations. You cannot have more than 54 outputs in any script. So that limits you. You can't just infinitely add outputs, lines, functionality into an indicator. They kind of draw a line somewhere, and most likely that's for computing power reasons. We can't just have a script that has infinite data. So I do have a separate script that plots all of the Fibonacci retracement levels that I've pulled, as many as I could, so 54 levels. So these are pulled from the daily time frame. Like I said earlier, I kind of went through how they are colored, how they're pulled. And you'll notice like I'm referencing FOMC day a lot because that day was tough to trade and it burned a lot of people. And so the more tools that you have that you can use to trade, then that can help you a lot. And FOMC day was a good day for me. So if we look here, we look at the fibs, you can see that the main thing to note here was the high of day, these high of day wicks were rejected at that fib level that I had plotted there. So when I saw that, I would never try to go long after seeing rejections like that, especially if you look at the nature of these rejections. I mean, this is, the price action was kind of back and forth, but this was an inverted hammer rejection, a lot of red candles. There's no need to go long here. The downside move here was, at 2:30 when we started to speak, and then that candle that I was talking about where we got that sell signal, you can see it close right below this Fibonacci level support, and that was also kind of, none of the candles were able to break that support. They all closed above, and then we finally closed below, and it was just a dump from there, pulling back to a few levels, and then we ended up finding support on some of those. So if you like to have additional levels to scalp to, if you like to hold contracts for a shorter period of time, you can add those onto your chart as well. And now key levels. So I've made 11 of these. So that's it's a lot of scripts. So the way that I make key levels is, key levels to me, I go to higher time frames. The higher the time frame, kind of the more validity that level holds. Because if you just think about it, like a 2-minute candle only holds obviously 2 minutes of data. Like a daily candle or an hourly candle, there's 30 times the amount of data as that 2-minute candle in the hourly candle, and there is a lot. So 30 times, so there's like 600 of those 2-minute candles in a daily candle. So when we look at it from that perspective, levels that are respected on the daily time frame or the higher level time frames are going to be valid even through those lower time frames. So what I like to do, I like to go through the daily the chart on all these tickers that I have listed here. I look at their daily charts, I find key support and resistances, I find pivot points, and I look for gaps. And then I mark those gaps and all those other things as key levels. And then I go down to lower time frames to fill in some of those lower time frame movements. And so what I do is I go in and I grab 54 of those levels. Those levels are usually to encompass all price action above, like a good amount of price action above and below the current price, and then I use those in my trading every single day. So on the right hand side here, this is the key level for SPY. So you can see on the script, all these levels are plotted, automatically. You don't have to add them, they're all just there. And if you just look at levels, you completely ignore anything else. This is literally the only indicator we have. You can see how price reacts to these levels. Now the low of day right here was 3 wicks. So we had like 3 wicks here on this key level. We found support there. You can see we end up retesting levels. We have an inverted hammer rejection of this level, followed up by a bearish engulfing candle, and then we end up finding support here end of day. And so knowing these levels allow you to understand price action. So if you hopped in here after you saw this triple wick right here, followed by this bullish engulfing candle, kind of like a hammer candle signifying reversal, we had a small flag, and then we had a consistent uptrend all the way. If you see an inverted hammer rejection of a key level like this, there's no surprise that we dump on the next candle. So you could have just rode this all the way up and then gotten out on that rejection, and there's things like that. So I've done this for SPY, SPIX, ES, QQQ, NQ, Tesla, Nvidia, Amazon Coin, Google, and Meta, and I've gotten requests to do other ones, which I can do at some time in the future, but managing all of these is kind of a handful as it is. But if I think Apple was one that I need to do because a ton of people trade Apple, so that's on the list of things to do. But here's some more examples of just using key levels. So on the left hand side here is Tesla key levels. Low of the I guess the opening support here was a key level for the high of day, and then on this huge dump we bounced off this key level, again bounced off this key level. This is QQQ, and then on the right hand side here this is Amazon. So these are just examples, and then I have links to all of these scripts. Excuse me. All these scripts are found on TradingView. So I have detailed descriptions of all their functionality on TradingView, and then I also have a change log. So anytime I make a change to any of these scripts, I put that into TradingView, and if you're I think subscribed to these, or you follow me or something, you get like an email, so you can keep up with all the changes. So I recently updated the SPY key level script, and I've done tons of updates on these throughout time. Just anytime I make some developments or I learn something cool in Pine and mess around with things, I like to update these scripts. So now I'll show you kind of how I set up my charts, just my personal preference. So I basically only trade SPY. Occasionally I'll trade other things. Today I traded AMD, and then like when Tesla dumped to like $100, I traded Tesla calls there. But very, very rarely do I deviate from SPY. So most of my trading is done on SPY. I just trade 0 DTE contracts. And this is what I usually have. So I usually add the SMT indicator with the SPY Fibs because I trade SPY. And then I add my SPY key levels, and then I add those supply and demand zones, and then the automated support and resistance. So to some people that's a cluttered chart. To me, I'm obsessed with just having as much data as I can on my chart that helps me. Obviously we don't want useless data. We don't want just a bunch of random lines that make no sense. So all of these lines, all of these zones, they have some kind of backing behind them. There's a reason we have them. And on the right hand side here you can see I'll go through that trade in a little bit, but I only trade the 2-minute and the 5-minute time frames. And the reason that I do that is because I trade 0 DTE contracts. So if I'm basing my moves on higher level time frames, if I'm trading the 15-minute time frame, every single candle is 15 minutes, and time is of the essence when you're trading. The lower your expiry on your contract, obviously, the higher your theta, and so the more time is of the essence, if you will. So I like to trade these short time frames because I like to hop in on those reversals, or some A+ setups. I like to hold them for a few minutes, get my 15 to 30%, and then hop out. So right here, what I do is I always wait for, if I want to use a signal to enter, I always wait for the candle to close. So the reason being that the script is essentially, I have it kind of coded so that it's like self-correcting. It's like a live script. So these alerts will go off in the middle of the candle. So it's the second that, literally to the second, and it'll timestamp it for you. The second all three of those conditions are met simultaneously, that trigger will fire. And if those conditions are unmet before the candle closes, that signal will not print. So if the signal prints after the candle closes, it stays forever. There's no, I think they call it repainting. There's none of that. If you see a signal that is there after the candle closes, it means those conditions were intact at candle close. So I always mark like the next level of if I'm entering 0 DTE calls, like I said, I want to get out ASAP and I want to take my profit. So if I'm entering calls, the next significant resistance that is overhead, that's where I take my profit. I don't try to hold, oh, maybe we'll break this support or this resistance, maybe we'll, we'll break through it, we won't reverse, whatever. That's oftentimes, if we hit a strong resistance, we're going to at least consolidate below that resistance, and even consolidation will eat your contract up. So I enter a call, and then I take the profit on the next resistance. Same thing with puts. If I enter puts, the next support that we hit, that's where I take my profits. So the way that I use my stop loss, so I don't have a hard stop. I don't use like 20 or 30%, especially on 0 DTEs. If you're using a hard stop on 0 DTEs, well, you probably shouldn't be playing 0 DTEs, but if you are using a hard stop on 0 DTEs, one wick can just take your stop out, and oftentimes that will happen. So what I do is, I've noticed that I like to use candle closes as my, that's when I get stopped out. So if I get a candle close, like here on this play, so here's what, I guess I'll narrate what happened here. So we got 3 consecutive buy signals. Excuse me. So I'm seeing that the 2 minute, the 3 minute, and the 5 minute are all pointing, their momentum is all shifting to the upside now. So here we get, you can see that we have like rising volume, which I like to see. We have rising volume. We have this bullish engulfing candle breakout. So you can see that we closed above all of these EMAs. We were wicking through this resistance multiple times. Now we finally closed above it. We have a bullish EMA crossover. We're above VWAP. So everything's looking good for the bullish side. And you can't see it here, but we also have a green MACD. So I noticed that we're below a key level. So we kind of flag under that key level, and then we finally close above that key level on a 5 minute buy. So now I have 3 signals, 3 buy signals. I have all these pieces of conviction. So I hop in a call right there, and my next target is actually this supply zone right here. So I hop in these calls, and honestly, most of the time, these candles are 2 minute candles or 5 minute candles. So by the time you sell, you probably even have more profit than you anticipated. So I hop in here, and then less than 5 minutes later, we hit my target of this overhead resistance level. And a play like this on 0 DTE contracts can usually get you between 10 to 20%, sometimes more, depending on, if you get closer to the end of the day, those are going to be more volatile contracts. You can actually get more out of those, but of course, they are riskier. So, and then you can see we closed above this automated resistance. Well, I guess it's automated support here. And then we made a move up to this supply zone where we had this rejection here. And so that would be, if you didn't take your profits here, you better get out here, because there's a key level on top of a supply zone. So anytime I have multiple like layers of support or resistance, that's an even stronger level for me. So if you have a key level overlapping a supply zone, that you already know likely price is going to have some resistance there. So I think that clarifies that. So now I'm going to go through some trade examples. So yeah, I got to show this. So this was cool because I was able to use a couple of my scripts. So this today was my biggest trade ever. So I had a $6,500 day off one trade, and a lot of it was luck, true, but the reason I entered AMD early in the day, well, number one, we had already been beat down on ER, I think like 8%, and you can see that we had the double buy confluence here. So I got 2 of these buy signals consecutively after one another. We were showing some strength, we were making a move, we closed above VWAP, we closed above all these EMAs, even the 200 EMA, so we're looking good, and I hopped in those 5-5, so I guess tomorrow expiry 85 calls, and I was just looking to hold them to swing into the next day. And because whenever I hold a swing or like a longer play, which I almost never do, I don't know, I wanted to do this, so I will typically set like the unusual volume alert, just because, and then also like set alerts at certain like prices, so if they hit that, then I can see that on my phone. And so AMD ended up holding that. We never closed below pre-market high. We're just kind of consolidating, make a move up. And then we got this massive volume increase. We broke out above this automated resistance here, which was just the high of day. And then we made a 10% move. I think it was actually like from the bottom, like a 12% move. And then those contracts ran like 2,000%, which that was awesome. And then this rejection point, which this was taken in the moment, but if you look at AMD for the rest of the day, this was actually the high of day, and this was an automatic resistance level drawn from May 1st. So that's exactly where we reversed. And so the reversal point was not arbitrary. A lot of these, if you keep drawing, if you understand charts and if you look at data and you look at price movement doesn't become arbitrary anymore. You see supports, you see resistances, you see zones, you see all this stuff, and then the way price moves starts to make more sense. So now let's get into some SPY trades. So on the left-hand side here, I'll go through what I see. So I get a 5-minute sell signal, right? So I go on and I see what's going on here. So first thing I notice, we have multiple rejections of this key level. 1, 2, 3, 4 rejections. And then I notice that we get the sell signal, we get this bearish engulfing close below the key level as well as below the 9 and the 21 EMA. And I also notice that we start to get gradually increasing volume on the sell-off. So volume for me validates moves. So if I see volume rising on a breakout, whether it's the upside or the downside, for me that validates the move. That means that sellers are more and more sellers are piling in if it's a downside move, and then vice versa for an upside move. So I get the sell signal. I hop in here because I see the rising volume, and I see that we have we rejected multiple times off of here. So my stop here would just be a close above the 9 EMA, and I'm really looking to hit VWAP and this key level. So that's a very small scalp. But what you'll notice here is you can see that we're having rising volume on these sells, and then the one candle where we're green, we have a significant drop in volume. So the buyers, there's not a lot of buyers stepping in here. This is a small pullback candle, and then the next candle is a massive dump. And that's a huge increase in volume on this bearish engulfing candle. And we notice here we have a triple support region. So we have the automated support that's created by the algo, we have the 200 EMA, and we have this supply zone from that day acting as demand here. So now we have 3 points of support. So if you entered here, you should definitely get out here because we would likely see a bounce. And we did end up bouncing here. This does look like a bear flag, and I think we did push back down here, but we ended up reversing. So that was a sell, that was a put that I took. Here was a long that I took a couple days ago, and then I think this one is one that I recorded live. So if we look on the right hand side here, what do we see? So we see this 2-minute buy signal, we see this push off of this demand zone, and we see that we're just gradually rising with a nice steady uptrend. You can see we're riding the 9 EMA here, which is good to see. And you can see that we finally have this breakout. So this breakout candle is what we're watching here. So if you look at the volume, you can see that we essentially from this candle to this candle, we have tripled in volume. So this breakout candle, this bullish engulfing candle, just goes through this resistance, and it goes all the way through this key level. So it's breaking through some heavy resistance. It has increased volume. We have our bullish EMAs. We are above VWAP. We are above pre-market high. We have a bullish MACD. Everything is looking bullish. And so now I'm looking for, so what makes sense here? I'm not going to necessarily chase this, but then we pull back and we flag into this key, this resistance. So this resistance acting as support was auto-generated, so I didn't even have to do that myself. You can see we pull back into this, we find support, and then we make a move to the upside. So when I see us flagging into the support here, I hop in calls, and my stop is just a close below the support level, and we didn't even do that. We made a push to this key level and the automated resistance, and that's where I sold all my contracts, and that was actually the high of day, and you can see a huge rejection off of these two levels. So having those levels on your chart, you would not have gotten caught here. You would have been, okay, let me sell here, let me take my profit, and this reversal happened right after. So let's look at some more. You can see here we have a 2-minute sell, and then we have a bear flag, continue down. Here we have a 2-minute buy. You can see we are bouncing off of a demand zone. We have bullish EMAs, we're above VWAP. I cropped out on accident, but we had a bullish MACD. There's likely heavier volume. And so here you see we have a nice breakout, we have a pullback, and we find support on this key level. And then here you would enter, you can use a stop loss. So if I enter a play like this, my stop loss is typically going to be a close below the 21 EMA, because we're so close to the 9 EMA, I can use the 21 EMA as my stop. But even that wasn't hit. We kind of bounced off the 9 EMA and then consolidate on this key level before making a move to the upside here, where we had faced some resistance at this auto resistance level. Here was another good 2-minute sell that I scalped. You can see we have a slight, so we're going and we're moving in an uptrend, and then we have a pullback. We have a bear flag here, and then we dump below our EMAs and below this resistance. We have a huge spike in selling volume here on this candle, and we get a 2-minute sell signal. Excuse me, keep coughing. I'm kind of sick. But we get this sell signal. We can hop in puts here, and then I just sold my puts on this double confluence support, which didn't matter. We just blew through those. So that's the support level right there. That's the supply zone acting as demand, and then we have the 200 EMA. So that's another one. Again, on the left-hand side here, you can see we have a sell signal. We have all of our pieces of conviction. We close below this automated support level, and then we make a move to the next support level where you can sell. And here we have double confluence buy signals. We break out above this supply zone and we close above this key level, so then you can scalp those calls to the next resistance point. Again, here we have a big buy signal, pull back to support, and then we have these automated resistance levels. So here this was a good one. This automated resistance right here, we rejected 1, 2, 3, 4 times, 5 times before finally breaking out. And so you can see, if you see this resistance right here, you can just take your profits here. You don't have to sit here for this constant consolidation and attempt to break out. Again, this is another chart. We have our 2-minute sell. You can see that we're right. Okay, so there was a question about, I guess, there are situations where I completely ignore signals. So if I get a sell signal that is right above VWAP or the 200 EMA, I don't take it. I disregard it, because at that point, if we have a sell signal above a very strong support, the risk to reward there's a higher risk there, right? So I don't want to enter a put right on a strong support. It doesn't make sense to me. So if I get a signal that's right on VWAP, or if I get a signal that's right on the 200 EMA, I disregard those signals. And that's just for me, because I like to be risk averse. If I have something like that in the way of my trade, then I just don't take it, signal or not, or whether conviction or not. So this one closed right on top of VWAP, so I actually did not take this, but it ended up dumping to this support right here. And then the next trade was a really good one. So this is what calls that I took. You can see we have a 2-minute buy. What's nice is we hop in there, and then right away we could have just taken profit here. We had this massive bullish engulfing candle, so you can scale out there. You can see we pull back. We never close below the 9 at all. We just have a consistent uptrend all the way until we hit this resistance right here. And what's nice is this bullish engulfing candle had some increased volume, so that kind of confirms that bullish breakout, and then we can just continue that move up. Let's see, 952. So here you can see we're just using, so I wanted to clear up the chart, and you don't even have to use EMAs, the indicator, whatever. So this is just a trade annotation only using key levels, automated levels, and then the supply and demand zones. So you can see we have a move to the upside. We reject this supply zone multiple times, push back to the support, bounce off the support. We get an inverted hammer rejection of the supply zone on increased volume. That's a big sell sign. Then we have consecutive sell candles, 3 in a row after that. Again, we try to break out of here. We can't. We consolidate around here. But once we finally break out of this supply zone and close above this key level on rising green volume here, buy volume, you can see we make a push to this resistance, where we then pull back, find support on this demand zone, and then make a push to that same resistance again. But before that, we find support on this key level. I think these might be the last two. Again, here you can see we have a big rise in volume. We have a bullish engulfing candle breakout. We have EMAs that are crossed. We can hop in calls here with a stop loss below the 9 or the 21 and take profits at the supply zone or VWAP right here. Again, we have our sell signals below the key level here. So you can see we dumped below this zone. We pulled back, kind of like we bear flagged into this double or triple confluence resistance. And then we got these sell signals where you saw some rising volume. You can hop in there and then take your profits at these demand zones. Same thing with this 2-minute buy. We had to bounce off these zones. You can hop in. It's kind of the same story. You can see I basically trade the same stuff every single day. That's the thing. Like, these setups are, a lot of them are almost identical. I'm looking for the same piece of conviction. I'm looking for basically the same thing, and so that kind of makes it boring, but it works, right? So I've done some good gains so far this year and last year, and so I've just been grinding and doing the same thing. It's boring. I take base hits for 10 to 20, 30%, but it adds up, and the power of compounding does the rest. So I'm going to do a Q&A here. So it's 9:54, so somehow I actually was on time with this, surprisingly. So I will take whatever questions, and I haven't even seen the chat at all because I was in full screen. So I'm gonna go through the chat in chronological order, and then whatever questions I get to, if there are any. Stockman, biggest man out there for sure. Let's make a nice reaction there. It will be recorded, so well, I guess you can probably see this. I'm using OBS to record this, and hopefully the audio is going to be there. So what I'm going to do is I'm going to render it afterwards. I'm going to, make sure I'm going to chop off the beginning and the end where there's noise, and I'm going to upload it to my YouTube channel. My Twitter name is Stockman Trading. I occasionally, so I posted, so that AMD, those AMD calls that went over 2,000%, I posted those when I entered them. So I posted the chart setup. I posted my conviction. You can see that on my timeline. when I hopped in, I was like, hey, this is why I'm hopping into AMD calls. I gave my conviction, my A+ setup, and several of my followers hopped in with me, and a lot of them made some multi-baggers, so that was really cool. So if I find a setup I really like, I will occasionally tweet out a live alert. But the main focus of what I do is I try to educate traders. I try to give them the tools to be self-sufficient, and so I try not to do too many live callouts. Yes, the indicators, they're not free, but I tried to make them as cheap as possible. So right now, so it's $29.99, but you get 21 indicators. You get every single indicator. I wrote an 87-page book and I published it, so you get a copy of the book, and then I'm integrating some of the alerts into a Discord so you can get those alerts through there as well. So it's $29.99, and then it comes with all of what I just mentioned. Let's see. I don't see questions. Oh yeah, so when I make an update to the script, you get an email. It tells you the update I made, and then what you would do is it should automatically update, but to ensure that it updates, you can just remove the indicator and re-add it, and then restarting TradingView 1000% ensures that it's updated. So yeah, this is nice. When I send it, oh, so they show up on the chart, like I probably answered this already, but they open as soon as they happen, they show up. So it's during an open candle, it's a live alert. Yep. No need to refresh. So with the free version of TradingView, there's a few restrictions. You can't do custom time frames, so you can't do a 2-minute chart. They only do like I don't think they do even time frames except for like 10 and 30 or whatever. And then you can also, I think, only have 3 indicators on your chart. So the reason that the good thing is I put like a million, you have a ton of functionality in one indicator, so you could actually get away with just 3 indicators with the free version. You could put the SMT indicator, the key levels, and the zones, but right now there's an issue with the supply and demand zones where they don't work with the free version. TradingView has some weird restriction on pulling data on a free version, so I'm working on fixing that. You can have alerts for literally every single time frame for buy and sell signals. So I have alerts for the ones I care about. You can have them all at the same time, which is cool. Okay, yeah, so to subscribe for the real-time data, so actually, I don't know, I might pull up my credit card info. I'm not going to risk that. But you go into TradingView. At the top left-hand corner, you'll see your username. You click on that. You go to Accounts and Billing. And then you scroll down and you click on like purchase like real-time data or live markets or whatever. And then you can select which markets you want to purchase. You have to sign some like forms, just like, because you're getting real-time data, and it's like $3 a month. Key levels. Yeah, I exit the trade at the, yep. Thank you, sir. What time do we need to set for trading SPY? I trade on the 2 and the 5 minute. Oh, yeah, so a lot of people ask me why I do this, why I trade, and I also work full-time. So I work remotely, so I can tweet, I can trade, I can do all that stuff. And I like this. Obviously, there's stability. So when you trade and it's your entire income, when you're reliant on trading for, to pay your bills and stuff like that, it adds some more pressure to your trading. And you guys know, the more like anxiety, the more nerves you have when you trade, the worse you trade. So I get to work an engineering job I enjoy. I get 401k match, I get benefits, I get insurance, I get all that stuff, and I can still trade. So if they ever try to make me come into the office, that's when I do this full time. So signal validity. The signal stays forever. I'm not sure what this means. I don't know what that means. Yes. Yeah, if I get a short signal on top of the VWAP, I ignore that. If we change our username. So if you change your username, you should still send me an email, because I don't think it would automatically, unless you're making, if you keep your same account, it should automatically keep access, but if it doesn't, you can just email me or DM me on Twitter. I answer everybody, so try Stratways. Oh, yeah, so Strat's a beast. The way he trades levels is insane, but it's just a different way of approaching things. So he does level-to-level trading, but he's got it all ironed out. For me, I guess I'm just a scalper. I'm not confident enough in level-to-level trading, but the way he trades is insane. It's pretty awesome if you know what you're doing. You could try using level-to-level trading using the support and resistance. I know some people do that. So they're 24-hour time. So the time is like military time. So like 0 to 24 when you're setting the restrictions on the scripts. So whatever time, I don't know. So for me it's 9:30 to 16, I guess. So wherever you're at, just use the military time and it should like use that. Time zone you have trading view count. Yeah, I'm Eastern time. Oh yeah, so even though you can have only like 3 indicators on your chart, there's like a loophole in the system on TradingView on the free version. You can have a bunch of alerts. You can just like add an indicator, set the alert, and then remove it, and then you can like kind of bypass the system. So you can have like alerts for 10 indicators, but you only have like 2 on your screen. So hopefully that doesn't get patched, you know. I tried the 3-minute time frame, but I don't know. I like the 5 minutes a little bit higher, and then the 2-minute. I get what you're saying because it's in between the two, but I don't really trade on the 3-minute. Yeah, so this is a good point. You don't even have to trade like me. Like this, the point of these scripts is not so that you trade like me, or if you don't want to trade like me, you don't have to. But like if you trade your own style, like El Toro is saying, you can just use these signals as like additional confirmation. Like if you have a chart pattern you like price action, and then you also get the signals, then it's just kind of like additional confidence and confirmation. Oh, that's a good question. I could add a Discord, like a channel for unusual volume, yeah, and then I can have like I can do that. My win rate is it's 81% overall, and then like in May, or I guess in April. So I posted my stats. I think in April through like TraderSync I had like 77% win rate. So my win rate is between like 75 and 80 consistently. I don't have anywhere. So I don't like type like SPY 412 put like in Twitter. If I tweet something out, I tweet out analysis, I tweet out my chart, I tweet out the technical, I like give you education, and then I tell you the contract I entered. So I don't just tweet alerts like that. And that was the last question. So I'll give it like 5 more minutes, or I guess if anyone has any more questions, just type them in. But yeah, I always focus on education. That's why I guess I wrote that book, which like if you don't write books if you don't care about education. So oh, thanks guys. Yeah, there's a ton of customization. So all right, I think I'm gonna head out, guys. I don't see it. If you have any questions, DM me on Twitter, or that's probably the best way to reach me, and I'll answer whatever questions you have. And this was a ton of fun. Hopefully you guys, if you have the indicators, you got some more knowledge, and if you didn't, then you kind of understand how they work. And I think that's it for me. Scotty, I guess, let me see. I'm going to do a plug here. If you guys want to purchase it, you can go to that link. I think that should take you there. But yeah, I really appreciate you guys, and have a great day, and thanks to Moneyline for letting me do this. I don't know if they're still in the chat, but yeah, have a good night, guys.